Hello, I'm Robert and welcome to my channel where I talk about everything automated trading. This is video 224. I really didn't realize I'd made that many videos, to be honest. And so, I've got an outline here on the side that I'll be checking once in a while to stay on track with the video. So for video 224, I'm going to go back to basic. I want to talk about what automated trading really is and why it is so wonderful. Automated trading, or automated algorithmic trading, quant trading, there's a wide range of titles and topics that this covers, but they're pretty much all the same. Automated algorithmic trading is the practice of using a computer to trade for you. Now, the computer does everything better than a human. It can make money faster, and it does a better job of losing your money at the same time. Yes, it can lose your money faster as well. Now, of course, better is a contextual term in that you can lose your money just as good as it can, but it can do it better because it can do it faster than you. Automated trading is a unique area where realistically dealing with the different principles involved is a wide range of topics. So let's get into the real first topic of what makes automated trading so special. One of the very first things that you'll see with automated trading is the computer can do it for you 24 hours a day, 7 days a week. For the cryptocurrency markets and certain forex markets, having that advantage can really give you a good edge in the market. And that's something that goes on and on and on, day in and day out, no matter what you are doing in your real life. That is a huge advantage over traditional or manual trading in that you can't sit behind the machine constantly looking for the right opportunities to trade. Automated trading and automated algorithmic trading is that practice of using a computer to use an algorithm or a mathematical formula to buy and sell based upon science and mathematics. That's a very unique and powerful combination because while there is no guarantees in the market, having such sound principles gives you an advantage in that you can trade more frequently through the machine without letting your own emotions get in the way. Now, the second part or second advantage that automation adds to the world of trading is the amount of data that you can analyze. It's very easy for a machine to pull in 10 or 20 years of information and actually run through the calculations and come up with potentials of when purchases and sales would have been made of the asset. It's also easy to see how many times you would have profited or what the shortcomings are within your technique that can be improved upon by the machine's capabilities. So it really does offer a wide latitude that can open the door quite nicely to better trading that is indeed better, meaning more profitable. One of the biggest things I have seen in my own personal trading is that I don't have to worry so much about when and where I make my trade because the machine is always able to be there when the opportunity occurs. That gives me a way to push through and accept smaller profits because I aggregate my results over time. And that really is the incredible part of this process. I don't have to be perfect in my trading. The machine gives me a little bit of sloppiness. That means I don't have to be concise. While my mathematics have to be accurate for the formula, there's enough room that if the machine doesn't get the exact perfect entry point, I'm not going to have my portfolio destroyed because of that. If I did that manually, then it would be much more difficult to trade because I have to be much more precise on when I get in and get out of the market. And overall, that is stress and emotion. A very big downside of trading. Emotion and fear will destroy your ability to trade. Automated trading gives you the ability to put emotion out of the picture because the machine is constantly doing the mathematics and it's constantly watching the market. By not having emotions affect your trading, you're not letting your trades suffer from fear and anxiety. Automated trading is a godsend for that because trading in general is very stressful. There are situations in the market that you can't control, and those situations really end up in a very high stress environment as your position sizes grow. The machine takes all that away and only sees numbers. So with a well-founded strategy that has been tested and proven reliable, the consistency of the machine brings to you a way of trading that surpasses the limitations of what you can do by yourself. The next point that we really need to think about in line with the consistency of your trading is the ability to apply your strategy consistently. You see, just because you can trade consistently doesn't mean your strategy is going to be consistent. And that's where the machine again outperforms the human, because it can take a strategy and through the rules and limitations of that strategy consistently and always apply it to the market. The analysis of risk versus reward, the analysis of accumulation versus exposure, all of that can be factored into the trading strategy that the machine can execute flawlessly, whereas we as humans won't be able to. And in fact, even in my own trading that I've put up on YouTube, showing my positions with Ohanda, that is all done by an algorithm. And that algorithm does all of the mathematics automatically. It applies a risk formula automatically. It makes purchases automatically, and it makes sales for profit automatically. It gives me the ability to limit myself with predetermined risk levels. See, I have an absolute. My absolute is X amount of dollars. The algorithm has been told that when my margin is at a certain point to stop purchasing. It has also been told that as my margin grows, to purchase less. So as I begin to get deeper positions, it becomes more strategic on what it purchases so that it has a built-in dynamic and automatic risk mitigation right in the equation itself. And that is really a big benefit because it's not relying on me to make math errors on a possibility that I might not necessarily be able to develop quick enough or to react quick enough to a market situation that it can automatically outpace me in. Now, as we've seen some of the really good benefit of automated trading, we need to talk about some of the more lesser seen benefits. And that is automated trading can actually reduce the amount of cost of trading. It does so by reducing human error, first and foremost. Human error is one of the biggest downfalls in trading, whether it's simple math errors, not timing the market correct, or simply not being aware of just how fast a market is moving. All of those situations lead to losses. By having the machine that's constantly watching the market and trading based upon a very set and specific set of rules, it can maximize the position and entry point of that position appropriate to the market. It can double check the math, verify the position, calculate the distances between positions, all in a fractions of a second, something I physically can't do. So literally a whole complete trade from beginning to end might literally take 300 milliseconds for the machine. Whereas for me to process that same amount of information, it might take me a minute to 2 minutes. And in which case, by the time I get the trade processed, I might have actually lost my profit. So that is really just one significant point. Now, a second issue where automated trading benefits the lowering of costs is the fact that it can scale in such a way that as I trade manually, I'm liable to take on more positions than what I really should. Because the formula is exact and specific, the automated trading is going to stay only to that formula. Manual trading means I have to look at the chart and I have to see whether or not I have an entry point. Sometimes I could end up taking an entry point based upon what I see that turns out to be a bad position, meaning it might have been close enough to visually trigger my equation, but from the standpoint of the machine, it's just enough that the machine would not have taken it. And that really is one of the other benefits. The complexity of the equation will grow when the machine is using it versus when we trade on our own. Because of the fact that we need to trade quickly. Most often, a trader that does his own trading will use very simple formulas that don't always produce the best results. But by using the machine to trade, we can build a formula that we know it will process in 1/100th of a second and still come out with an incredible result. So that is really just a few of the good parts. So we really want to talk about those issues more frequently. And that's what we're going to do through examples on this channel, showing just how good automated trading is. But we're not just going to stop there. We're going to demonstrate it. As you've already seen in the channel, I do put my results up, both in shorts and in long videos. So you see how well automated trading works. Now, it's not perfect. It does require careful testing, careful analysis, proper risk management, proper understanding of your budget, and most importantly, it requires patience. Jackrabbit TV is my automated trading equations that work on accumulation. They don't take losses in the market if they can avoid it, because it's better and safer to take small accumulations over time and average them together. Through that process, we're able to mitigate risk and weather the market through aggregation. And that really is one of the best trading techniques available, because it gives us the opportunity to lower our risk by lowering our exposure. So hopefully you will continue to join me as we celebrate the 224th video of my channel. Thank you for watching this far. If you haven't subscribed already, please do so. And please like this video, because it really does help spread this information to a wider audience. Thank you, and until next time.